Wagner here just after 10:30 in Honolulu, 4:30 in New York on Thursday, the 23rd day of January 2014, and this is the daily report for gold and silver. Although off of their highs, we have a massive surge to the upside in both gold and silver today as we see a brutal sell-off in the equities markets. Gold currently trading at $1262.70. Puts it up roughly $26 on the day. The high is $66.80, the low $12.34. Silver up about 25 cents right now, trading at $20.02. The low $19.65 and the high $20.42. As hard as it is to report, we did get stopped out of our trade. We had stops at 65 on our short, in at 45, out at 65. Puts us at a $20 loss on the trade. Not happy about it whatsoever. However, what are we looking for in the near future, and where do we stand in terms of a potential breakout to the upside? All of that, all on today's daily report. Traders, there is absolutely no doubt in my mind that today's move, this kind of an upside move, could absolutely be a game changer. Looking at a 60-minute chart, you can see that there were periods of time in which this market just flew off, and then small periods of time of contraction or retracement. And when I say retracement, I just mean a small little resting period before moving to higher ground. And that's probably what we're looking at now. You can see on this last hourly chart, it is a small red candle, but at the same time, you can see how it's come off of these lows coming in at around 61 here. And traders, when we look at it through the eyes of a half a day candlestick, you can see this one top that we had right in here. This came in at around December 5th of last year, and we're closely approaching that top. So this is the only place we've got any kind of real interim resistance right now, right in here. You can also see that this was a supportive area right in here, and we are trading right above that particular price point. It was supportive here. We had it as resistance here. We had it as resistance here. So it's a pretty important key level. But the key is that long-standing resistance line, and have we blown through that? And traders, this is why I believe this day is such a game changer. Let's go ahead and blow this up. Think of it this way. Since, call it October of 2012, last time we saw the market trade at 1800, we've had pretty much a straight move down. Each time the market would trade, it would come to this area and then sell off, come to this area and sell off. At this point, though, we can look and see that we have potentially broken through that long-standing resistance. That, to me, is absolutely significant. Even though we just took a hit in terms of a short position, that's probably the last short that we're going to play out for a while, because my sense is that if we find any kind of support in this area, the next real level that this market could effectively trade to is to go in and challenge 1300. We've got this 23% retracement at 1304. So whether it's a little dip or buying the breakout, we are going to get long at this point. There is no doubt in my mind this is the scenario that we've really been waiting for, because what it says to us in terms of our long-standing Elliott wave count is that we could in fact have seen this market play out in such a way that we're getting that truncated bear market, or the truncated fifth wave. This fifth wave, we've counted effectively in terms of our actual sub count: 1, 2, our long 3, and our 4. If our 4 breaks through, which it has, it now cannot go into this particular area, which is the area of 2, which tells me that we could have in fact concluded our wave count to the downside, and we're now moving into an upside move. This is a pretty significant rally. Now, it was technically based, and there were a couple of large stop orders that really pushed this market and propelled it through this particular point. But any way we want to look at it, we are now at the point. If in fact the market backs off, it tells us one thing. But if we get any kind of significant support in this area, Traders, my sense is that we're looking at a different ball game. Now, traders, we're looking at the Standard & Poor's. This is the cash Standard & Poor's. There's no doubt when we take a look at this market over the last 1, 2, 3, 4, 5 weeks, we have had the markets trending higher, but seems as though we've hit some sort of a ceiling. You can see a ceiling right in here right before a sell-off and a ceiling right here before a sell-off. The question is, what kind of retracement will we see, and will we see the equities markets to continue to go under pressure? Now, the real question we have to ask ourselves in terms of the precious metals markets is, we've had this upside breakout. There's absolutely no doubt about that. The real question has got to be whether or not we're going to see a continuation, and this is the beginning of things yet to come, or if we've gone just up to a certain resistance point and we'll back off. My sense is that we've been waiting for a breakout and a breakout to the upside. This is a daily chart. When you look at the daily chart, you can see just how significant of a move we witnessed today as we broke above these tops. And that's why my sense is when we look at this market in terms of this particular area right here, and that's based upon, this is back in December, so really call it first part of December, we hit these tops. This is about 1265, and at that point it then backed off. The question we have to ask ourselves is, will we see continuity? Because this market has genuinely taken off from these lows. And when we consider the fact that last time we were at these lows, and let's go back, last time we were at these lows, and I'm talking about the one real significant rally that we had back in 2013, in which the market moved literally from about 1181 to 1435. So now we've gotten this double bottom. We confirmed that. And now as the market moves up, where could it go to? Well, if it breaches over this particular top here, and that's why I'm saying we want to get long in this market if in fact we see support in this area just above this top, because my belief is if that happens, these are our next real levels. Just before 1300, we have real resistance at 1360, and then of course at roughly 1435 is the tops, but the bodies of these candles fall at around 1420. But the key is this: last time we had this bottom, we saw a pretty significant move in the market. So the question is, are we in store for a similar kind of a price jump and an elevated rally to the upside? We are looking at our weekly chart, and on our weekly chart, it kind of reduces a lot of the noise, and that's why this truncation could make some sense. When we take a look at the market in this way, and we're not looking at any subcounts, we have our wave 3, our wave 4, our wave 5 is truncated and concludes with the double bottom. We are now green candles, and we are right at, on this particular chart, we are right at that portal, a breakout. As I said, significant support in this area tells me that this market has some steam to release, and the breakout to the upside, it could in fact continue. Now, traders, all I've done is converted it back into a standard candlestick chart, because that's going to give us a sense for our true opens and closes. And if we adjust this a little bit to account for this particular high in the marketplace and this high, in other words, line it up in that way, you can see we are breaking just above that point, comes right to this point, comes right to it, and comes right to it. So it seems to me when we're looking at it through a daily, a weekly, or even our intraday work, we are at a point right now when we could be witnessing not only this double bottom that we see here, but a move similar to the rally that we had back in 2013, the only real significant rally. Now, it is backing off. It's trading at about 61, but it's not backing off that much considering the kind of move that we've had. We've had these solid up weeks in the market, and although I believe that once we hit this resistance line, there was a real good opportunity that it would back off, I felt comfortable about it yesterday. But as I watched trading in overseas last night, I could see a rally beginning and then of course in the morning the market just took off and went running. My sense is right now that we want to see if it can form some kind of support here. If it does, our moves are pretty clear-cut in terms of our next strategy. Now, although we see a clearly defined rally taking off in the gold market, we do have silver up, but when you look at the Japanese average, I'm going to convert it in a second. This, of course, is a daily chart. You can see it doesn't give us that same clear-cut indication. Now, one of the reasons is it has been trading in that tight range. When we remove the Japanese average, so we get a true high and low, yes, we are trading above $20, but look at how far off of the highs this market has come today. And that's significant because what it tells me is that we've got a base forming. You can see these series of, except for this aberration right here, but you've got a series of the market trading with higher lows all the way up, but you're not really getting the higher highs. You're getting the market really finding a ceiling at around 2051 is the mark here, and 2058, of course, is our mark. As I said, I do not like taking losses in the market. We have taken a loss, but we calculated it in terms of a tolerable risk. And my belief is that if we see some sort of support come into this market, we will more than make it up on the next trade. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.